One stock that has been not performing that well is Zensar Technology. So, Manish, we have the management joining in. Would request you to listen in and then perhaps give us your comment as well. It was a weak set of numbers for them. The revenues were down 3.2% quarter on quarter. It was impacted by seasonal furloughs and the margins also contracted. Manish Tandon, the Managing Director and Chief Executive Officer at Zensar Technologies, joins us now. Manish, hi, good morning and thanks for joining in. You know, your revenues were down at a time when many of your peers have been reporting very strong numbers. Apart from the furloughs, the seasonal furloughs, was there any other factor that contributed to this downfall? And what is the prognosis over the next couple of quarters?
Yeah, so first of all, I would argue that the numbers are pretty good if you look at year-on-year comparisons. See, this is a seasonal quarter, and depending on your concentration, client concentration in certain sectors, your numbers will go up or down or will go more down. But if you look at our year-over-year numbers, we have seen secular growth. South Africa for us is up 18% in constant currency. UK, Europe is up 12%. BFSI is up 12%. MCS, which is manufacturing and consumer services, is up 7.7%. In fact, the only sector that has not done well for us is high tech. And unfortunately, high tech is about 35 to 40% of our exposure. And hence, that is reflecting in the sequential QoQ of 3.3% negative. But as I said, we are very pleased with the results. And as far as investors are concerned, I've always maintained that it's more about the profits. And year over year, our profits have increased 108%. Our PAT has increased 108% compared to last quarter. So we are making very good progress. And I am pretty pleased with the performance that we've had.
Okay, but you know, on the margin front, I understand that your margins at 17% plus are healthy and better than what you've guided for, but it's down quarter on quarter, and this despite no wage hike this quarter. What explains that, and what is the average margins that you're looking to do? Yeah.
That is very simply explained that last quarter, when we did 18.6%, we had explained that it's a 1.6% one-time impact, positive impact on certain things. So our normalized margins last quarter were 17%. This quarter, our normalized EBITDA margins are 17.2%, despite significant furloughs and a lot of headwinds in terms of negative revenue growth. As I said, I'm very pleased with the numbers and our performance as far as EBITDA margin is concerned. And to answer your other questions, we have always maintained that we will maintain EBITDA margins in the mid-teens, and we are well above those numbers.
All right. Manish, hi, morning. I've said it quite a few times that you're quite pleased with the past quarter, but I want to understand the way ahead. Will quarter 4 be a growth quarter? And are furloughs getting extended into quarter 4 as well?
Furloughs always get extended to quarter 4. Last week of December, last 2 weeks of December, and 1 week of January. First week of January is when most furloughs happen. The impact of furloughs is less in January than it is in December. So that is as far as furloughs are concerned. Otherwise, as I said, we are seeing good growth numbers except for a high-tech portfolio. And if we can manage, if the ground situation improves in high-tech, then we will continue to see growth.
Manish, hi, good morning. Prashant here. Just two questions. One, on the healthcare side, you've reported the third quarter of a drop there. Why and by when does it recover? Some of the peers who've reported numbers so far, they reported growth. So did you lose a client or something, if you can tell us? And second, yeah.
Go ahead.
And on M&A, should we hear from you something soon? An acquisition or something?
Number one, healthcare. Actually, we started healthcare as a vertical just 2 quarters back. This was our first quarter where we carved out healthcare as a vertical. And I think the reason for the decline has been that there were some large projects that got completed. We are building up the healthcare team. As you know, I have extensive experience in healthcare and life sciences. So we are building up that team, and it is a sector which we plan to grow in the coming few quarters.
On M&A, Manish?
Yeah.
On M&A acquisition, something we should expect soon? Anything you can tell us?
We are sitting on about $250 million of cash. Cash position is good. We continue to look at almost every week. We are looking at a company which can fit with our strategy and comes at a price where I can maintain my fiduciary responsibility to the shareholders and not overpay for this thing. So all of us are working hard. There is a specific team working on it. I myself am personally involved, and we continue to look at assets. But we will not do any acquisition just for the heck of it. Just for
Okay.
the sake
Every
of
week
it.
you're looking at a company? This is one company, or you're looking at many companies?
No, as companies come in the market, we evaluate them as per our strategic
Okay.
needs, and we take one or two companies forward over a period of time. At this stage, we are looking at three companies.
Three
Where
companies, okay.
things are where we are communicating with the bankers. But let's see. You never know how these things pan out.
All right, we'll leave it at that. Thanks a lot for joining in. Your stock has done very well in the last 1 year. If you pull up a 1-year chart, the stock is up 150%, one of the biggest performers. But this quarter, the numbers were impacted because of seasonal furloughs. So let's see how things go from here.